Ajay Bagga joins us. Ajay, nice to have you back. What do you make of the current market setup? The selling in US market this week has been quite acute.
Yeah, I think the shift is starting out of the US back into emerging markets. Chinese markets have outperformed. Hang Seng is up 18% since the day of Trump election. So clearly, reallocation will happen back into emerging markets. India will benefit from that. China is right now a strong beneficiary, and we are seeing the global brokerages putting out buy calls on India. I think that is a big change. Domestically, Nikunj, I think we have made a turn. September was probably the cyclical economic down point, and December was cyclically probably the earnings, corporate earnings lowest point. And since then, we are seeing a big reversal. RBI has moved quite strongly on liquidity, on macro-prudential easing, as well as on rate cuts. Now we expect April also to get another rate cut. So RBI is doing its bit. Government expenditure is up. December capex was up 91% year on year. January 55% year on year. Still, we won't make the budget number on capex, but at least the momentum is strong going into the new year. So I think domestically we solved for a lot of the issues. It's more the global overhang of the Trump tariffs and the uncertainty he's brought into the equation, which is keeping Indian markets down right now. And I think a rotation out of US markets into emerging markets is starting, Nikunj.
The New Year which we celebrate in December, there's a New Year in Diwali, there's a Chinese New Year. आप कौन सा Happy New Year की बात कर रहे थे?
Financial year.
A financial year.
I didn't know that is also celebrated. You've been working a lot on your advanced taxes. I can see that. That's why thinking about New Year's. Paid a lot of taxes this time. 15th.
Yeah, that is always a painful time to have to pay taxes. Nobody wants to.
So at least you're paying taxes, Ajay bhai. Think about it. Where are taxes for anybody? Nuresh, look at his face. I mean, I can tell you that he's not going to pay taxes this year, right, Nuresh?
Taxes are a problem. You have unrealized losses and realized profits this year.
Kunal, paying taxes? Advance tax 15th?
Doesn't look like.
Now I know which New Year you're talking about.
See, Nikunj, asset allocation is your only free lunch. So this year we have been blessing our fixed income parts of the asset allocation. That's all.
Okay. No. I mean, it's tax harvesting, advanced taxes. I mean, we don't normally talk about it, but for any individual, they are important components. I mean, if you have some income where even TDS gets cut, you'll have to think about advanced taxes. We'll maybe talk about it next week, that what is tax harvesting and what are some of those tricks which you need to know in case you really want to avoid taxes. Pay your taxes. I'm not saying don't pay your taxes, but where can you really avoid some taxes? Okay, Kunal, for those who want to pay some tax, they'll have to make money. Give us an idea in which somebody can make money and pay a tax.
So I think in terms of the short-term ideas, I would look at Manappuram Finance. That's a very, very interesting chart, because even if we look at it over the last 2 months where the markets have been extremely volatile, the stock has been into a different tangent altogether in its own zone. The stock trading about 200 plus mark. Currently, it's absorbed a major part of the market volatility. And I believe that even if we see maybe a week of more stability for the markets, we could expect Manappuram Finance to get into a breakout yet again.
It's not looking great actually. Nuresh, in this entire market rally, whether it's small or large, we've not seen the big boys participate. Nothing big in Adani Group, nothing big in Reliance. These are the names you want to see, or stocks you want to see charged up when you're convinced that markets are making a comeback.
So we are not seeing follow-up moves. So if you look at Reliance Industries, it broke below 1200. Went to 1160, and then we went back to 1250 in 3 sessions. And now we are stuck around that 1250 mark. So what is happening is we are seeing 2-3 day moves, and then we just pause out, whether it is a breakdown or a breakout. So this is classical time-wise consolidation, which is going on. The range gets smaller, the volumes dry up. So this is where we are in, and we could spend quite a few weeks like this, it seems.
Okay, that's the take coming in on Reliance. Let's see how we're closing in for the week. And we've managed to hit a 2-week high, but we've closed in the red on a net basis, or rather closing in there, mainly dragged by IndusInd Bank. That, of course, turned out to be quite the key culprit. Even the Midcap index was down about almost 1% this week. Vodafone Idea, AU Small Finance Bank, these were some of your key laggards in trade. And the small cap index fell about over 2.5% this week. IT had the worst week. It's an 8-month low that the Nifty IT index has clocked for itself. It's clearly been the top sectoral loser. Almost down about over 4%, dragged by L&T Tech, Wipro. These were some of the hard hit stocks. On the other hand, of course, Nifty Metal, that hit a 2-month high. But regardless, this week we're closing in the red. Energy as well, closing in the red, but it's a 3-week high regardless. And the Nifty Bank, largely dragged by IndusInd Bank solely, that of course managed to clock in a 9-month low. Ajay, not getting into specifics, of course, of IndusInd Bank in case you can't talk about it, but would you say that the selling is overdone with the day before's 27% fall?
Aisha, more, it's where the market is in the cycle. This kind of news would have got absorbed when you were on the upward momentum. Now, markets are hating any uncertainty, anything which is unanticipated. So that is the issue. On a balance sheet this size, on a P&L of this size, you would say it's a minor blip, but the markets have chosen to react much strongly, much more stronger than what the management described it as. And we have to pay respect to the market sentiment. So I think it's more a question of where the markets are positioned rather than any particular bank. I don't think with the kind of supervisory audits that RBI has in place that there are major skeletons sitting in the Indian banking sector. I think that can be very strongly ruled out. The NPA situation is quite good. Microfinance is an issue, but that's an issue which is broadcast for nearly 1 year now. So it has got well digested in the pricing of the stock. So derivatives always, hardly anybody understands derivatives. So hopefully with this new exercise that RBI is doing where it's asking banks to disclose, we'll get an idea, but I think it's more the uncertainty. And banking remains our top sector. And within that, private sector banks remain quite favorite for us. I think as the bounce comes into India, you will see this sector really outperforming.
My point, Ajay, is for banks to do well, economy has to do well. And for economy to do well, earnings have to do well, consumption has to do well, government spending has to do well. For a sector which is a proxy on growth, why should one buy it when we are not confident about economic growth? And it's a logic which I'm asking everybody is that you buy banks when you want growth. You don't buy banks when growth is bad. But everyone is saying buy banks because you will make money.
No, and Nikunj, you know the answer. You have thrown a curveball at me, but overall, when nominal growth, even at these rates, you are at 9.2%. And going ahead, we are expecting double-digit nominal growth. Corporate earnings, we are expecting 12 to 14%. And then the base effect kicks in from June. June and September, you will get a fillip in the year-on-year numbers because these were very suppressed numbers in the present fiscal. So as the new fiscal year starts, you will get that base effect also. And banks are going to fund it. What you are enjoying right now is cleaned up bank balance sheets and cleaned up corporate balance sheets. There is a huge output gap because of the very restrictive fiscal and monetary policy. Monetary has started easing, but it takes 6 to 12 months to fully transmit into the economy. That's why we would prefer that in April, if it's a bigger rate cut, that will help the recovery to gain more momentum. But we don't see an issue with the Indian economy per se, and the banks will fund it. So that's the reason I think nearly the entire street is in a mood of putting banks as the favored sector for the recovery. And they will fund that in a very large economy. They will provide the growth capital. So it's a no-brainer, keeping a large portion of the portfolio in these banks.
Look at the bank nifty and the nifty, 1 year, 3 year, 5 year. I mean, don't go beyond 5 years. Data is not there. So this is 1 week, right? Let's look at not 1 week, 1 year, 3 year, 5 year. Then we can compare. 52-week change in the bank nifty is 1%. It's not given any returns. Earnings have got compounded. That is important. Earnings are getting compounded. When earnings get compounded, stocks, they start becoming cheaper, because then the P multiple starts changing or book value starts increasing because NPS are not coming. So that's the 52-week change for the bank nifty. Now from 2022, that's 3 years. 3 years is like once upon a time. It's like a proper cycle. 3 years and the bank nifty, this after COVID, after all that adjustment, remonetization and all that, the bank nifty is giving you a 23% return. But in 3 years, the nifty has given you, let's look at it, and then I'll throw this at Kunal and Nuresh. That's the Nifty 50. And let's look at the bank nifty, please, 3 years. It's not much of an underperformance, right? Halla kyun mach raha hai? 23% for Nifty in 3 years. 3 years, right? Just check the data again.
Yeah.
23% is what Nifty is giving you. Aisa, 23%, that's it. 3 years. I mean, now we are going lower than fixed income, frankly, think about it, right? That's the time mean reversion kicks in. I mean, that's the time you say that's time to, once you go below the mean, you buy it because you go back to the mean.
But 23% would be at par with US, because world markets also have done very well in the same time period, right?
I'm not sure of the exact return.
One of the
over there.
best returns.
Yeah.
No, Nasdaq must have given better returns. No, 23% is nothing, Aisha. 3 year return, 23%.
Yeah, but it's still best in the world.
No, it will not be. I mean, Nasdaq
At par at least. With US maybe.
I think other indexes have done well.
Oh,
you compare with Nasdaq. No, I mean, let's look at this one. Ajay, you may want to pay attention here because I'm just trying to discuss the theorem here. Ajay, 23% in 3 years for Nifty, which means that on a compounding, this is not even a return of what, 8%, right? Now 8%,
6.5%.
6.5%. 6.5 means that you're way above the averages, way below the averages. Average is 12, which means that mathematically speaking, in next 3 years, if you have to come back to the average, that means next 2 or 3 years would be double-digit mid-teen returns.
It should be. If the market chooses to mean revert now, or is it a period like 92 to 2002 when 10 years you went nowhere, or is it like 2008 to 2013 where it went nowhere? Then it could be 5 years also, Nikunj.
The data in you say, oh my God, so much so for this bull market, and and large cap stocks have not even fallen. Let's look at the small cap index actually last 3 years and the mid cap index. I mean, it's nice to talk about some numbers. I don't have my Bloomberg burning. I would have done it internally. And there you go, last 3 years, the return in the small cap index is 32%. And in the mid cap index, let's look at the return. 58%. So this just tells you that where the real, J curve in the market has happened.
Yeah.
Another interesting data is that I was looking at the breakup of the SIP flows. And the SIP flows in the small and the mid cap funds in last 1 month, which is the breakup of the data, in this market fall, the small and the mid cap contribution has gone higher. So Indians have invested and increased the SIPs in small and mid cap stocks. Right or wrong, I'm not getting there. All I'm saying, data is data. So Ajay, what's next now? Mid cap will underperform, large cap will outperform. Everyone is saying that. I can assume that you will also say that?
I frankly think if you are going for growth, the mid caps will outperform. Small caps becomes an issue of survivability, and we have seen pretty strong cuts coming in. So it is cyclical. When the economic cycle turns faster, we are not in a slowdown or anything. We're still growing 9.5% nominal, which is pretty good on a global basis. We'll not get out of poverty or low income trap at this. So that is the big issue for India. But the 10% of India which is doing well is reaping the benefit. So I would say mid cap will probably outperform still. And Nifty will be on a catch-up mode. But when that catch-up starts, I would be very wary of putting that. But what I gave you the factors, I think both monetary policy wise as well as the support from the fiscal, both have now turned around. And from here on, we should see a stronger economy. And now, whether it is six going to 6.5 or we finally breaking through 7 again, difficult to say. But it will happen. It's a matter of whether it's 6 months or 12 months, but it's coming. Private capex will still take time. That is not coming back in a rush because you have a big output gap in the economy. So we are not using the entire capacity already. So, but having said that, there could be some policy changes which could help. Nandan Nilankani made a very nice presentation yesterday at one of the VC conferences in Bangalore, and things like that, if they come in, if the amount of ease of doing business, any changes made there, that can unleash a lot more of the animal spirits. But I would say still mid caps will outperform, then Nifty, and then small cap in that order for the next 2 years.
Let's get some thoughts on this whole debate of large cap is now way below its mean. It has to revert back to mean, which means that if it has to revert back to the mean, which is 12 to 13%, that means in next 3 years, you definitely will get 2 years, or maybe you will get one big year, one flat year, and one okay year. But gains in excess of 15-18% are coming now.
So if you look at large caps have underperformed in the last 2 years, but overall, it is the banking which has underperformed the most post-COVID. So from 2009 to 2020, banks always outperform Nifty over a period of 3-5 years. So the big catch-up, if it has to happen over the medium to long term, it has to be banking space, which for the last 5-6 years has not caught up.
Okay. So 8 minutes left, and we are studying a market which in last 20 minutes actually we just gone from 3 year to 30 minutes. In last 30 minutes the market has gone done nothing, just minor uptick from the day's low, and that's about it. It's a very, very ordinary kind of stuff. Kunal, we've discussed I think L&T quite a lot, right? And every time we've discussed it, somehow it stops moving after that.
Yeah.
It's just a coincidence, right?
Yeah, so our discussion is that the stock has not been moving in the last few weeks. And that's what it is for L&T. But the only good part about L&T is that it's been a better performer as compared to the peers in this leg of sell-off, because at a point where ABB, Siemens, etc., I think these stocks have fallen almost 40% from their 6 month, 7 month or 9 month highs for themselves. L&T has been one of the stocks which has fallen just about some 20-25% broadly. And even the pace of sell-off has not been very consistent for L&T. The stock goes into a correction, then pauses for at least 4-5 weeks. And then if the sell-off aggravates for the overall market, that's where you've seen L&T also taking the sell-off or downtrend further. But right now, I would believe that the stock so far is into a consolidative mode. 3100 seems to be a good support for L&T so far.
Yeah, quite surprising actually the way L&T has moved, considering this is the one large cap sector leader to really bet on, but it's been really stuck doing nothing practically for the last 1 month. In the last 3 months, of course, it's fallen about 18% or so. But Debashish Panda, he's ready to bid adieu to IRDAI. He's going to be completing his 3-year tenure. Who are the top contenders for the IRDAI chief? I've got Anurag Shah, my colleague here, with the exclusive details on what he's picking up. Anurag?
So, present IRDA chief Debashish Panda is completing his tenure and he will be demitting office today evening. So his tenure was eventful, lot of big initiative taken by Debashish Panda, but on 6th of March, Finance Ministry has invited application for next IRDA chief, and what we are picking up from our sources that there are 3 top contenders for next IRDA chairmanship, and the first name is Sriram Taranikanti. He is currently director at Lal Bahadur Shastri National Academy. He is an IS officer. He has been executive director for 5 years from 2011 to 2016 at IRDA, and is studied from BTech from IIT Madras. Second contender as per our sources is Girdhar Armane, former defense secretary, former road transport and highway secretary. He was also part of IRDA for deputation for 3 years as an executive director for in-charge inspections. So he has also studied in IIT Madras, MTech. And the third name, what we are picking up from sources, is Ajay Seth, the current Revenue Secretary and Department of Economic Affairs Secretary. So these are the three contenders, what we are picking up from the sources. Still, there is a time to apply for the till 7th of April. Government has invited to apply for the post of new IRDA chief.
Thank you. IRDA is going to soon have a new chief, but right now we got 5 minutes left, and then we break out for a long weekend. And if you're a trader, well, there's an expiry, and nobody's looking at trading long positions because you don't know what could happen. I mean, 3 years is like a decade with Donald Trump as the president.
Yeah.
Right?
It's a century.
So, you don't know that what will happen on Friday, and forget by the time when you come back, you don't know what is coming on Monday.
Yeah, absolutely.
So nobody should actually, hand on a heart, trader should not take positions.
Yeah, they should be absolutely as light as possible.
Yeah. Ajay, 3 days we are going away. You don't know when we will come back. What will happen on Monday morning?
Yeah, absolutely. If you see yesterday, the CPI number came low in the US. The market stock futures started going up in the US, opened up. Then all of a sudden, markets decided, no, I'm still nervous on the tariffs. And then by the end, there was another, pull up in the market. So, yesterday was still a day where Trump only did the long interview along with the Irish Prime Minister. You were really hand in your mouth waiting, okay, when will he explode and when will something happen? And luckily, it went off quite pleasantly. But, morning you say 50% tariffs, evening you say 25% tariff, next morning you change your position again. Markets can't handle that uncertainty. So people are saying we'll wait it out. US money market funds have crossed $7 trillion in AUMs. Even 5 was a big thing by 2023. A lot of the incremental money was not going into debt, but rather going into money markets where you were making 4.5% virtually risk-free in dollar terms. And now again, we are seeing that money rushing in there, even though 1% rate cuts have been done by the Fed. Still money is going into the money market funds, which have crossed $7 trillion.
It's so good having you on the show, Kunal. Naresh, we'll let you guys go on that note as well. Wish all our viewers, of course, a very happy Holi from all of us.